Well, hi everyone, and welcome to the Buffett and Beyond weekly stock analysis video. And today we're going over a stock in the Home Builders, and it's called Installed Building Products. I could think of a lot better name than that. But anyway, Installed Building Products. And folks, can you beat tripling the S&P 500? Yeah, we better look at this stock. And remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And, don't forget about the 2-week free subscription, folks. If you want to get the stock analysis and stocks inside the ETFs that we talk about on a daily basis and our daily research letter, sign up for the 2-week free subscription. You'll have access to the computer programs as well. Just need your name and email, buffettandbeyond.com. Buffett is spelled with 2 F's and 2 T's. Okay, Installed Building Products. What does it do? Well, it installs insulation, which was 61% of 22 sales, shower doors, closet shelving, mirrors, garage doors, waterproofing, rain gutters, fireproofing, window blinds. Folks, it's all the stuff we don't want to do ourselves. And when you're a building contractor, you want to stand there looking cool with your hard hat on and pointing your finger. Well, these are the people that you call to do all that stuff that you don't want to do. Now, these guys operate 230 branches in 48 states. I don't know if they know we have 50 states or not, but they're operating in 48 states, serves home builders, construction firms, and homeowners. They're 10,300 employees. And let us look at the numbers. Now, the green lines are installed building products, and the blue lines is the average stock in the S&P 500. And when we looked at clean surplus return on equity, and remember that the clean surplus return on equity is totally different than the traditional accounting return on equity, because the clean surplus number is a comparable number. It takes out everything except the core operations of the company so that we can compare one company to another. And here we go, clean surplus return on equity doubling the S&P 500. I gotta love that. Net income almost, doubling and a halving, so 2.5 times that of the average stock out there. Revenue, which is very important, doubling that of the average stock out there. So this stock is rocking, folks, and it comes from the Home Builders Group, and we're going to show you some neat charts in a minute. But the first thing I want to look at is net income, which is different than earnings. It is the clean surplus earnings, and it means it takes out all the stuff that's not included in the core operations. And we see that the earnings went from almost nothing all the way up to this huge number, but it's been staying this way for 3 years, projected for 2024. But the clean surplus return on equity is huge. I mean, this means right here, this means it's a better than average stock, and it deserves to be in our growth portfolio. But again, we're looking at these numbers are not going up faster each year, but these are really nice numbers. And the reason is because the home builders slowed down a little bit with rising interest rates. The home builders slowed down. We have a shortage of homes, but people that have a 3.5% mortgage rate are not going to sell their home and move into a new house which has a 7.5 to 8% mortgage rate. So that's why building has slowed down, but we're going to look at some charts in a minute. Now, the retention rate is about 83.8%, call it 84%. That means it's taking most of the money it's making and putting it back into itself in order to grow. And here are the numbers, the net income growth and the revenue growth, which are extraordinarily high, as we saw in the chart just a few minutes ago. But right now, they are not going up for this year or not projected for next year either. Again, we're in the building materials. Now, the years to pay debt, a little higher than we like to see. Buffett's rule is if it takes all the money that the company is making and just uses it to pay off debt, he wants to see 5 years or less. We'd like to see 3 years or less. So the years to pay debt is sitting right in the middle between us and Buffett. And the problem is that if interest rates go too high, then too much of the money they're making has to go to service the debt as it rolls over. So that's why we look at that number. Recent dividend, 1.2%. It's small. We like it small because we want to see the company take all the money it's making and put it back into itself in order to grow. But bottom line is these numbers over here, clean surplus ROE, look great. Now, let's see how this company has done over 1 year. Black line is the S&P 500, and the yellow-colored line, or not lemon-colored line, but orange-colored line is up 60%, with the market up about 15%. Folks, this is quadrupling the market over the past 1 year. So you can see that people are buying this stock because they do expect housing to expand. And since we have a shortage of houses right now, the market participants are looking at this whole industry to grow. Over 5 years, 210% versus the S&P of a little under 60%. So it's more than tripling, almost quadrupling the S&P 500 over 5 years. Very, very nice, folks. That's what we like to see, consistency. Now, we've added the Home Builders, and that's right over here. You can look at the XHB, that is the Home Builders ETF, and IBP, Installed Building Products, is part of the XHB. So when we look at the S&P 500, about 59%, the Home Builders up about 100%. Folks, that's a nice difference right there over 5 years. And then Installed Building Products, 210, well, it's actually about 212, 213% right in here. Very, very nice. Now, let's look at something closer to our hearts. And when we look technically, and this is the Home Builders ETF, we can see it broke through this blue line, which is the 50-day moving average, just like the market. This shorter term indicator up here is pointing up, and this intermediate term indicator down here has just given us a buy signal. Let's look at Installed Building Products. It looks like the same thing, doesn't it? It broke through its 50-day moving average, and as I'm recording this on Thursday afternoon, late Thursday afternoon, it is holding that 50-day moving average. So that's pretty important. And the intermediate term indicator down here has been turning up. It hasn't given us the buy signal on this stock yet, and we'll wait a couple of days. But once it does, we're going to pounce on this, even though it's in our ETF, our top stocks in our ETF portfolio. And the ETF is the XHB, which is Home Builders, and this is the second best stock in the whole Home Builders ETF. So yeah, we think this is going to turn up, and we think the Home Builders already gave us a buy signal, and so we think that'll be good going into the future over the next 5 or 6 years as the economy picks up steam, when the Federal Reserve is finished raising interest rates, and they may be finished, folks. So anyway, that's what we're looking at. So, folks, we had a pretty tough month this month, and we are in a time when this past week the S&P 500 index and the QQQs and the Dow all gave us buy signals, and so we're looking at that. But we have a little problem with September and October being weak months during the year. But we have that buy signal, and we're going to see if the market can hold on. So, folks, you take the weekend off. We're here for the long weekend. You go out, you walk on the beach, walk on the golf course, sit and watch television, be with your family. Most of all, stay safe. And, folks, we'll see you back here after the long weekend.